Hi, Larry Berman here, and here's what's on my radar this week. Well, the end of July is here, and the beginning of August, September, which all will know are two of the most volatile months to the downside. Hence why I'm wearing my gambling shirt on. I got my Vegas shirt on today because it's a crapshoot for the next couple of months in terms of how the markets play out. Now, here's what we do know. On Monday, August the 2nd, we get another Treasury announcement, and they're going to tell us what their funding needs are for the next few quarters. We know what they are for August and September. There's a deficit in the tune of about $350 billion that needs to be funded in excess of what the Fed is buying today. Notwithstanding tapering, which probably doesn't begin until later this year. And based on what Chairman Powell said in this week's meeting, we're probably not going to know. As he's writing his speech for Jackson Hole, he didn't want to tip anything. He may or may not. So we'll see. If the employment numbers, which they're gearing in on, are very robust, then they may use the Jackson Hole event to say, here's what we think about tapering. If not, it's the September meeting where they all update their dot plots again. So, that's really a big focus in terms of liquidity, because we are 100% certain that the only thing driving the economy and markets and hence earnings is the massive stimulus that was put in place. Because where stimulus wasn't put in place in places in emerging markets, they're struggling now. I mean, the difference between the US market and a lot of others kind of look like this in the last number of months. So it's stimulus driven. Our good friend David Rosenberg dissected the Q2 GDP numbers that we just got, and he basically says we're flatlining again. If it weren't for the $1 trillion that was put into people's pockets over March and April, which a lot of was saved, that boost to consumption didn't show up in June. So basically, the economy is struggling here without all that stimulus, and the question is, how much more is coming? When do those jobs come back, and when does the Fed pull back? Because inflationary pressures are building, and it's the inflationary pressures that really have got to be the challenge for the Fed's model here. Because if this is more than transitory, if this lasts longer than a little while, then the Fed has a big stagflation problem. And they don't have the tools to deal with them, because if they start to raise rates much more than the market expects, which is only a little bit, then we've got a big problem in equity markets, which will make the Fed easy again. So we're in a liquidity trap here. It is driving things. I don't see a lot of upside here for the next few months. In fact, 5 to 10% type correction would be extremely, extremely healthy for the overall trends of the markets right now. And we think we're going to see that, and frankly, where we need to be hedged, we are in our portfolios. So bull and bear pick of the week. The bear pick, reiterating, continues to be defensive in terms of hedging your downside. Put protection is relatively cheap, and whether that's on the NASDAQ or on the S&P 500 or any other indices. But there are a lot of individual stocks that have already been taken well off their highs out to the woodshed. And there's some names out there that are starting to get interesting. For the speculators out there, some of the cruise stocks, with the Delta variant starting to look interesting. Don't buy them today, but put them on your radar. So a lot of the stocks that have come off from the speculative rally that they had when things were good and we were reopening, now look, the charts look, I wouldn't say like death, but near death. And that's the time where there's opportunity. So have a look at some of those names. In the ETF world, you can look at one of those travel type ETFs that might be interesting once we get past the worst of this pullback here. Again, opportunity is going to develop, we think, in the next couple of months. Have a great week, everyone.